The memory stocks, those high-flying favorites that dominated headlines and portfolios through 2025, are suddenly wobbling, and panic is everywhere. Investors who once felt invincible are now gripped by uncertainty, watching as prices tumble and volatility spikes. It's a scene that feels all too familiar for anyone who's ridden the wild ups and downs of this sector before. Headlines flash red warnings across every screen, portfolios look bruised and battered, and everyone's tempted to hit the sell button before things get even worse. The fear is contagious. Social media is buzzing with hot takes, and even seasoned investors are questioning their strategies. But let's pause for a moment. This isn't the end of the world. It's a classic market shakeout, designed to scare out the weak hands and test the conviction of every investor. These corrections are part of the game, separating the patient from the panic. What if this drop is actually a golden opportunity in disguise? Sometimes the best moments to buy are when everyone else is running for the exits. History shows that fortunes are made by those who keep their cool when others lose theirs. Today, we'll break down what's really happening behind the scenes, why the market is reacting this way, and how the pros are positioning themselves for what comes next. We'll dig into the data, the trends, and the strategies that separate winners from losers. We'll take a closer look at industry giants like Micron, Samsung, and SK Hynix, companies that not only weather these storms but often come out stronger. Plus, we'll spotlight the lesser-known players powering their growth and innovation. Forget panic. This is about turning fear into profit. The memory trade isn't dead, it's just reloading for its next big move. Smart investors know that volatility creates opportunity, and those who act with courage can capture the upside. So will you be ready when the memory stock rocket takes off again? Let's dive in and find out together. What's happening in memory stocks isn't new. It's a familiar cycle that's played out countless times before. If you look back through history, you'll see the same pattern repeating itself decade after decade. Investors get excited, prices soar, and then, almost inevitably, there's a sharp pullback. It's a rhythm as old as the market itself. These stocks surge, then pull back sharply, scaring out the nervous and rewarding the patient. The volatility can be unnerving, but it's also what creates opportunity. Those who panic and sell often lock in losses, while those who stay calm and hold, or even buy more, are often rewarded when the cycle turns again. The semiconductor industry is cyclical, driven by supply, demand, and pricing. When demand for memory chips spikes, thanks to new technologies or booming industries, prices and profits soar. But as companies ramp up production to meet that demand, supply eventually catches up, and prices start to fall. This cycle of boom and bust is built into the very fabric of the industry. When demand is high, prices and stocks soar. But at the first sign of new supply or softening demand, traders rush to lock in profits, triggering a cascade of selling. It's a domino effect. One person sells, then another, and soon the whole market is in retreat. But underneath the panic, the fundamentals of the industry often remain strong. According to Mizuho's Jordan Klein, these drops are predictable, and they're buying opportunities, not reasons to sell. If you study the charts and understand the cycles, you'll see that these downturns are rarely the end of the story. Instead, they're often the best moments to invest for the long term. Many seasoned investors actually look forward to these corrections, knowing that they can pick up shares of great companies at a discount. The market hands you a discount on world-class companies every few months. It's like a sale at your favorite store, except instead of clothes or gadgets, you're buying pieces of businesses that power the modern world. For those who are prepared, these moments are golden opportunities to build wealth over time. You can panic and sell at the bottom, or you can recognize the pattern and buy the dip. The choice is yours. History shows that those who keep their cool and act with conviction often come out ahead. It's not about timing the market perfectly, it's about understanding the cycles and having the courage to act when others are fearful. This isn't gambling, It's a recurring opportunity. The ups and downs are part of a larger, predictable pattern. If you can learn to spot it, you can use it to your advantage. Smart investors don't just react to headlines, they look for the underlying trends that drive the market forward. The memory sector powers everything from AI to smartphones. Every time you use a device, stream a video, or store a photo, you're relying on this technology. Its importance is only growing as our world becomes more connected and data-driven. That's why, despite the volatility, the long-term outlook for memory stocks remains strong. The smart money uses these cycles to build wealth. Will you? The next time panic hits, remember the pattern, and decide whether you want to be among those who profit from it. Let's take a closer look at Micron Technology, ticker symbol MU, a company that's become almost legendary for its wild stock swings. If you want a masterclass in volatility, Micron is the perfect case study. It's not just another tech stock, it's the king of memory, chip volatility, and its journey on Wall Street is nothing short of dramatic. Just glance at its chart, and you'll see a true roller coaster. Breathtaking highs that make investors cheer, followed by gut-wrenching drops that test your nerves. The peaks and valleys are so sharp, it almost looks like a thrill ride at an amusement park. For example, not long ago, Micron's stock plunged 17%, and this happened right after a strong earnings report. You might think that's a disaster, but in the world of high-growth stocks, it's just another day. Since mid-2025, Micron has experienced at least 6 major pullbacks, each ranging from 14% to 21%. Every single time, the bears came out in force, loudly predicting the end of Micron's run. Headlines screamed doom, and many investors panicked. But here's what actually happened. Those who stayed calm, held their shares, or even bought more during the panic were handsomely rewarded. Each time the stock rebounded, climbing to new highs and proving the doubters wrong. Even after the most recent drop, Micron is still up over 200% since mid-2025. That's an incredible return for anyone who had the patience and courage to ride out the storms. The lesson here is clear. Volatility isn't something to fear. It's the price you pay for the chance at big rewards. If you want outsized gains, you have to be willing to stomach the wild swings. In powerful growth stories like Micron's, those sharp dips aren't signals to run away. They're golden opportunities to get in at a discount. The best investors recognize that these pullbacks are entry points, not exit signs. When a market leader like Micron goes on sale, savvy investors don't panic, they buy. They know that temporary setbacks are just part of the journey to long-term wealth. So, learn to embrace the dips. That's where the real money is made, by staying patient, thinking long-term, and having the courage to act when others are fearful. When markets get rough, pros don't panic, they buy. Experts like Jordan Klein call this pullback a gift, not a warning. Healthy corrections shake out speculators and reset valuations, letting new buyers in. The demand for memory chips, driven by AI, cloud, and smart devices, remains strong. The sell-off is about momentum, not fundamentals. Pros know price and value diverge short-term, creating opportunity. Analysts expect these stocks to rebound in the next 3 to 6 months. The playbook: ignore the noise, buy the dip, and focus on the big picture. Micron is huge, but the memory market is global. Don't miss out on giants like Samsung, the world leader in memory, and SK Hynix, the second largest chip maker. Samsung's scale and R&D make it a powerhouse. SK Hynix is critical for AI and data storage. SanDisk is another key player in NAND storage. Together, these companies dominate the industry. Investing in a basket of these names diversifies your exposure to the sector's growth. All benefit from the explosion of data and demand for faster storage. Don't limit yourself. Explore the whole memory universe. Want a smarter way to play the memory cycle? Look at the equipment suppliers. These companies, like ASML, Applied Materials, and Lam Research, make the tools memory giants need. They profit before a single chip is made, as manufacturers order new equipment. ASML dominates with its EUV lithography machines, essential for advanced chips. Applied Materials and Lam Research provide other critical tools. Equipment suppliers benefit from industry growth and innovation. Investing here gives you exposure to the entire semiconductor ecosystem. Sometimes, selling the picks and shovels is the best way to win the gold rush. Why do memory stocks drop so fast? It's not fundamentals, it's momentum trading and psychology. Algorithms and traders chase trends, amplifying moves up and down. When momentum stalls, they sell, regardless of company strength. This triggers panic among retail investors, fueling a feedback loop of selling. Headlines turn negative, fear spreads, and prices drop further. But these pullbacks wash out short-term traders and create bargains for long-term investors. When you see a sharp drop on no news, ask, is this just momentum shaking the tree? Often, that's exactly what's happening, creating your opportunity. So, what's next for memory stocks? Experts see a strong 3-6-month outlook, barring major global shocks. The recent sell-off has reset valuations and shaken out weak hands. Demand for memory, driven by AI data centers and smart devices, remains robust. As earnings roll in, fundamentals will shine, and momentum will return. The current dip is a window to build positions before the next upswing. Recovery and renewed growth are likely ahead. Patience now could mean big rewards soon. We've dissected the pullback, studied history, and explored the memory universe. The panic is temporary. The long-term demand for data is unstoppable. Risks exist, geopolitics, recession, but volatility is the price for big gains. If you can stomach the swings, the rewards are enormous. Memory chips power the AI revolution, and these companies are its backbone. Buying during fear is like grabbing beachfront property during a storm. You can join the panic, or follow the pros, and buy the dip. Do your homework, recognize the pattern, and seize the opportunity. The memory game is on. Are you a player, or are you being played? Booyah!